Alright guys, so let's show a loss now. Let's show what happens when you do what I've been talking about recently that is very bad. You chase and you do not wait for your entry, even though the move starts to work out in your favor. So this is exactly what happens. I'm going to show it. You know, I've told you guys that I took a lot of time to really do these videos and start trading for the right reasons, which does not include constantly trying to show that I make absurdly high amounts of money, because that's not the reality of trading. I have green days, I have red days, and sure, you know, I'm making more money than I'm losing, but it's not about the ego anymore. And I think really just letting go of the ego and mastering the psychology and the emotional part of trading is what's helped me to kind of level up recently in terms of returns and just trades that I'm taking, and even just reactions. Like, I don't get like crazy happy when I make money, and I don't get sad when I lose money, because both of those can be good things as long as they're a part of your strategy. So it's just another day of business. You know, my emotions shouldn't be dictated based on my P&L. They should be dictated on whether or not I followed my rules. So with that said, this is a day I got back from September, what is this, the 7th? I just going through random videos, and I thought this would be really, really useful to see. So I was trading this SPY here, the SPY, and I was looking for a move. The first thing I was looking for was for a move downwards. So you can see here, I drew a bunch of lines here. They were critical levels that I identified on the chart. So for example, this line here was the end of a gap. So I put that line up, and this was kind of a potential target for the way down. And this line here, it's a level from the previous day. So each of these lines is a day. These dashed vertical lines is 1 day of trading. So this is the bottom of the intraday price, whatever the price is on the previous day. So I marked that all the way out. And then there's this kind of opening trend line kind of channel that I also drew on, which I think I used the wrong levels, but I'll show you that in a second. So I was betting on the downside of this. I was seeing that we kind of opened under this, and we had a bit of a pre-market rejection of this. So my plan was to get short, essentially, by buying the puts. I was just waiting for any sign of weakness here, and I was getting ready to buy the puts because I knew that it either was going to hold and bounce, or more likely my plan was that it was going to fall. So you can see here, I'm just waiting. I'm looking on the 1 minute here. You don't necessarily have to do that. That's what I was doing just to make sure. It just kind of looks like it's going to roll over. So here I am. I take 5 contracts to start. I believe that's like $400 position or something like that. Now I'm adding here to 10. As I see the weakness, the contracts are going up in price. The underlying is falling. So my plan is starting to work out. There, I've added to 15. And I'm pretty much in the money at this point. My average is 89. And I say to myself, all right, my stop is either, I can't remember if it was like right here or right here. I'm waiting, and I add one more contract at this point. So 16 contracts at 89, or so 89 cents each. So multiply that by 100, and I believe my position is somewhere around let's just calculate. Let's just pull it out so you can see it. So 16 times 0.89 times 100. So $1,400 position. And I'm looking for a move down to one of these targets. I'm going to see how it reacts. There's nothing else in the way. So I go, okay, this could probably work. So you can see some of my bad habits here. And this is what I started to fix recently. I randomly took off 5 contracts just to lock in some profits. Now that's not a long-term sustainable strategy. which would be locking in your gains early. If my risk is right here at say 87.20 and I entered at around 87, so 20 cents of risk, I'm taking profit at 20 cents. That's a 1-to-1. That's not what I aim for. I aim for 3, 4, 5-to-1 risk to reward ratio. So taking your profits early is a very, very bad habit. You go to your target or you stop out of the trade. That's it. If you run on emotions, then you're going to make stupid trades. And it's the same type of trader that will hold on to a loser is the same trader that will sell out of profits early. Now you could say, oh, but you're locking in gains. No one ever went broke taking profits. But it's not a sustainable, successful strategy to consciously take your profits earlier than you should, simply to lock in some profits so that it looks good or that you feel better. So what happened here? So it came back up to my entry. I bailed out of the whole thing. And then I switched to calls. So this could just show me, for example, what I learned from this day was that my edge was not here. My edge was not playing this to the downside. This teeny little window to the downside is not my edge. My edge is buying at the extreme of a channel, whether it's the bottom or the top. In this case, it would be the bottom, which would be support. So I should have been loading up on calls in this area, which is extremely close to this trend line right here. So in this general area, my edge would be loading up on calls down there. So you can see the calls that I'm getting into right now. I'm getting into them at the wrong spot. I mean, this is probably the next best spot to get in would be at this level that I already have marked. But it's rough. You can see, you know, it pulls back to an acceptable position or an acceptable spot, which would be right around here. So this is where I should have gotten in initially. So this would have been a break-even trade if I had decided to sell out. But I wouldn't sell out because I have a plan. I'm buying on support. And if it broke this low, that's when I would sell. But you can see I'm already down 90 cents to 75 cents. That's like 13-12%, just like that. And it ends up going up in my favor. So again, with options, you just have to be so disciplined and precise about your entries. Otherwise, you get stopped out for a big percentage or dollar value loser. And it's discouraging because you feel like you don't know what you're doing, you're never going to get it, blah, 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 blah. So if I was in at the proper time, I would still be holding. And again, now there's a lot of stuff going through my head like, oh shit, like, so which direction is this? And now I'm starting to see the support here. I'm starting to see the gap fill. I didn't really have a clear plan going into it, and I was sort of winging it as I went, which just is not a good strategy. So I sold out of those contracts at 75, and now I'm back in at 85, 86. So you can see it's very, very sloppy. And yes, it ended up working out, and we started moving up and up and up towards the target, which is the gap fill, or this level up here at 288. But again, along with the sloppiness from before, I made the mistake of, selling out the contracts early. I sold them right here just because this winner was now bigger than my loser, so I could say to myself and feel good and go, oh, thank God I closed the day green. But you shouldn't be thinking, oh, thank God I closed the day green. You should be thinking, thank God I followed my strategy. Whether it was a win or a loss, this massive bird just flew across the window. You should be thinking, I followed my strategy perfectly, and with my risk to reward set in place, that is what will make me profitable long term. So again, my entry was here. There's no reason I should have put this line here. The only reason that's there is because this is the high that it made before the pullback. Whereas my target, since my entry was it should have been down here. If this was my risk, then sure, maybe as a first trade, if I had only taken that, this would be an okay spot to start taking profits, actually. Because now that I see it, if you go from here to here, that's pretty close to 3 or 4 to 1. I can't see the numbers exactly, but you can tell by the space in between right here on my mouse and the support line that that distance is maybe a quarter of the distance from here to here. So that would have been okay, but I was chasing it. I was doing all the stupid stuff, and I was acting off emotion. So if I had taken just that one trade from down here, I probably would have been up about $500, $600, and I would have been taking profit at 3 or 4 RR, as I call it, which is a great strategy. And then maybe you let a third or a quarter of your contracts ride to your next target, which is here, or back down to break even. That would be a good plan. But my plan sucked. And of course, it kept going without me pretty much all the way to my target. And not only that, I started playing the opposite side of it. I started playing the puts on the other side, being very, very sloppy and greedy and just randomly locking in profits. And I saw, oh, $55. Oh, let's add that. But see, there's no trade in here. Maybe if you took the puts all the way up here and then rode them all the way down to an acceptable target, but there's no edge in there. There's no other trend line. Maybe if there's a trend line from here to here, you could be buying puts, but I wasn't doing it for that reason. I was doing it for avoiding the pain, the emotional pain of a loss. But the emotional pain shouldn't come from a loss. Again, that is in this book. The emotional pain should come from not following your strategy. Read this. Join my Discord and maybe read it if it's maybe in there for free. But again, I can't say that because it's illegal. So read this book or just buy it. It's an amazing book. It turned around my trading completely. Because your emotions should not be dictated by your P&L. It should be dictated by if you followed your plan. And losses are part of the plan. It's just how big the losses are compared to your winners. I know it sounds so simple and so like, yeah, no shit. But like, I'm finally just coming to terms with this now. So that's pretty much what happened for the rest of the day there. That is some insight into the emotional side of trading and what you should be doing, what you should not be doing. Some good examples of both of those. Hopefully this was a very action value packed video. Let me know your comments. I'll get back to every single person. And if you like this content, please hit that subscribe button. I'm trying to get to 500. We're almost there. Let me know if you want me to live stream at 500 subs. Maybe that would be fun, or if you would just rather see me continue to upload videos, whatever it is. Thank you guys for watching. We will see you later.